Hello and welcome back to another video. In today's video I'm going to be giving you my outlook on the 10-year US government bonds, DXY, EURUSD and GU. I'm also going to be reviewing our previous week price action as a result of market participants' trading actions. First things first, before we actually look at our outlook, let's actually take a quick look at our economic calendar, giving us some sort of prediction on how market participants are actually going to behave going into our next week. So first things first, Monday, more likely than not, we are going to see some sort of range of consolidation as we actually have no USD drivers. More likely than not, we actually are also going to see this range of consolidation due to the significance of where price is actually trading inside of our weekly fair value gap. Now, I wouldn't be surprised if we do make some sort of retracement into our 4-hour fair value gap, then from here, show an intent that price action actually does want to trade lower. But I'm not looking to get in a trade on Monday, unless we actually break the low here and it's going to be some sort of clear, high put in and nice framework for continuation to the downside. But more likely than not, as mentioned, we are going to see a range of consolidation, so it's going to probably be best to wait and see how our daily candle actually materializes on Monday. Now, going into Tuesday, this is when we see our first driver actually come into play. CB consumer confidence at 3 p.m. More likely than not, this move is going to be some sort of manipulation, potentially taking out internal range liquidity, then shown an intent straight after if price actually wants to trade lower or price wants to trade higher. Now, for me, my most favored direction is actually going to be lower, and I'll get on to why later on in the video. Wednesday, we can see this is when our drivers actually come into play, some of our more significant ones, such as FOMC at 7 p.m. later on. So price action should actually show an intent for the day, and actually creating the liquidity we've actually created from Monday till, Wednesday's New York session. We should see FOMC actually, take out some side of liquidity, which from this point onwards, our drawn liquidity for the week will become a lot clearer. Going into Thursday, this is when more likely than not our Euro drivers and USD drivers are going to be a driver of our expansion. Now, as mentioned in previous videos, historically we've seen that Wednesday more likely than not is going to be some sort of retracement. So this aligns nicely with our FOMC. So as mentioned, it is probably going to be important to hold off any, swing positions until we've got 3 daily candles actually materialize. Friday, we've got another, USD drivers at 130. More likely than not, this is going to be a driver of our actual expansion to, our drawn liquidity. Potentially, more likely than not, I'm actually favouring our drawn liquidity to actually be sell side. Now, this will become clear as the week goes on, but I did mention that, if we do show signs of intent that participants do want price higher, I will actually look to get into positions, targeting this high. But vice versa, if there's intent shown to sell side, I'm obviously going to be doing the same, but I'll update the Telegram with this. But the main reason why I actually do favour lower DXY is solely down to where the 10-year US government bonds is trading. As mentioned, Monday, more than likely we're going to see some sort of consolidation. You can see these 2 resting highs here. And we are going to probably see price actually, be traded into this daily fair value gap. Then from this point onwards, if we trade above, we'll obviously be looking for higher DXY. But if we show a quick, clear sign that price action actually does want lower, this is going to be perfect to actually line for some sort of swing trade, etc. for Euro USD and GU. My favoured pair this week is going to actually be Euro USD, primarily down to our drawn liquidity being a lot clearer than GU. As we can see here, we actually have our monthly fair value gap. Now, as we can see in our previous week, we can see our weekly candles become more and more predictable. So from this point, obviously we've disrespected some of our daily levels here and actually managed to trade above. So from this point onwards, I'm going to make it clear that I do actually favour higher prices for Euro USD, and my weekly drawn liquidity actually is the monthly fair value gap. I'm going to be making this a lot clearer, any positions, any, changes on probability going in to the week in my Telegram channel. So I'll keep every one of yous all updated. But overall, I do hope this video helped, and thank you very much if you've made it this far.